Welcome to today's deep dive. It is Monday, March 2, 2026. And I have to tell you, the stack of sources sitting right in front of me today is absolutely wild.
It really is a fascinating intersection of information because usually we treat these things as completely separate worlds.
Right. We are looking at a bizarre, almost contradictory mix of documents. On one hand, I've got breaking life or death military dispatches.
Yeah, geopolitical news alerts coming straight out of the Middle East.
Exactly. And sitting right next to them, we've got these incredibly dense, deep in the weeds financial filings and futuristic tech press releases.
But today our mission is to synthesize all of this for you. We are going to unpack a massive sudden surge in global defense stocks that happened just this morning.
And more importantly, we're going to explore the surprising, genuinely futuristic technology that is actually driving these century-old companies right now.
Because to truly understand what's happening in the news today, we can't just stare at the stock tickers or their earnings
Oh,
reports.
no, definitely not.
We have to look past the financial numbers. We have to understand the collision that's happening right now between legacy warfare, modern market psychology, and the rapid, almost frantic integration of artificial intelligence.
It's a complex picture,
Yeah.
but it's incredibly revealing once you start putting the pieces together.
It really is.
Okay, let's unpack this. The catalyst for all of this financial movement happened over the weekend.
Right.
We saw coordinated U.S. and Israeli strikes on Iranian military facilities. And a detail that really jumped out from the military briefings and clearly caught the attention of the financial markets was the heavy utilization of Lockheed Martin's F-35 Lightning II jets.
U.S. Central Command actually released video and images of these specific aircraft in action during the operation.
And the immediate market reaction this morning was just swift and global.
It wasn't just a ripple, it was a sweeping sector rally. The European defense companies were clear winners right out of the gate today.
I saw Britain's BAE Systems climbing anywhere from 4 to 6% in early trading.
Yeah, and Germany's Hensoldt jumped 3%. We also saw solid across-the-board gains for companies like Thales, Rank, and Leonardo.
And the U.S. markets followed that exact same trajectory the second the opening bell rang.
Northrop Grumman climbed 4%.
RTX surged over 4 to 6%.
L3 Harris gained 5%.
At one point today, I was looking at an iShares aerospace ETF, and it was on pace for its highest close on record.
But if you look at the trading volume, the clear focal point of this entire surge is Lockheed Martin.
Yeah, they really are the center of gravity for this particular market movement. Let's zero in on them, trading under the ticker LMT.
Just to give you an idea of the sheer momentum here, the stock closed at $658.08 last week,
But in extended hours today, it surged past $691.
which puts it incredibly close to its 52-week high of $669.75.
And there is a statistic in the trading data that I think perfectly captures how frantic the market is right now. Today, traders bought 155,267 Lockheed Martin call options.
Wow. And for anyone who might not trade options regularly, buying a call option is essentially placing a leveraged bet that a stock's price is going to keep rocketing upward by a certain date.
Right. People are putting real money on the line, betting that this surge is just the beginning.
And to put that 155,267 number in perspective, that is a 1,691% jump over their typical daily volume.
It is a wildly bullish signal from traders.
What's fascinating here is the underlying market mechanics driving that kind of volume. When you have escalating tensions in the Middle East, or really any major geopolitical conflict breaking out, investors instinctively seek out what we call defensive plays.
Right, and that is both literal and figurative in this case.
Yeah.
They're literally building defense equipment, but financially, what makes them a defensive stock?
It comes down to a metric called beta. Lockheed Martin has a characteristic that investors absolutely flock to during a crisis, a very low beta.
What's the number right now?
It's sitting around 0.22.
Okay, and for context, the broader market as a whole has a beta of 1.0.
Exactly. So a beta of 0.22 means the stock is highly insulated from broader market volatility. Think of it like a heavy shock absorber on a car.
So when the rest of the market is experiencing dramatic swings and panicking due to global uncertainty, Lockheed Martin provides relative stability.
It doesn't panic when everyone else does.
But while the markets are looking at this through the cold lens of beta and call options, we really need to shift gears for a moment, because the dispatches sitting on my desk also outline the very real, very human cost of these geopolitical tensions.
Yeah, it's important not to lose sight of that.
Alongside those soaring financial charts, I was reading through a press release issued today by United States Central Command, or CNTCOM.
It is a sobering report to read, especially when contrasted with the euphoria on Wall Street.
It details a major incident in Kuwait. 3 U.S. F-15E Strike Eagles, which were flying in support of a mission called Operation Epic Fury, crashed.
When you parse the CNTCOM statement, it really paints a terrifying picture of how a tragedy like this unfolds in modern combat.
The airspace over the region was just incredibly chaotic.
The statement notes there was active combat that included Iranian aircraft, incoming ballistic missiles moving at supersonic speeds, and slow-moving drones all sharing the exact same sky.
A completely saturated radar screen.
Exactly. And in the midst of that overwhelming chaos, the U.S. jets were mistakenly shot down by Kuwaiti air defenses.
It was a friendly fire incident, brought on by the sheer density and confusion of a crowded, high-stakes airspace.
It's a terrible situation.
I do want to emphasize the good news from that military report, though, which is that all the pilots on those 3 crashed jets managed to eject safely.
That's a huge relief.
They were recovered, and they are currently in stable condition.
Yeah.
And the U.S. military has officially launched an investigation into how the misidentification happened.
It highlights the extreme danger those pilots face every day, but it also creates a jarring, almost philosophical bridge to how we view the financial markets.
It's a stark reminder of the realities on the ground. But what is truly wild to witness is the cognitive dissonance of Wall Street. The military is dealing with the chaos and tragedy of downed pilots and friendly fire. And the financial sector is purely looking at the demand for replacement hardware.
Experts frequently warn that a prolonged conflict increases market uncertainty, which usually makes investors pull back and protect their cash.
But not today.
No. Despite the undeniable reality of an escalating conflict, and despite the very public news of 3 downed U.S. jets, the defense sector entirely maintained its massive financial gains today.
The market absorbed the reality of the fog of war, looked at the wreckage, and continued to buy.
So to understand why the market is so incredibly confident, why they feel so insulated from the bad news, we need to look under the hood of this defense behemoth.
Looking at the SEC filings for Lockheed Martin, which is the world's largest defense contractor by revenue, the scale is just hard to wrap your head around.
It really is.
In 2025, they pulled in $75 billion in full-year sales.
To put that in perspective, that's roughly the entire gross domestic product of some medium-sized countries, generated in a single year just by building defense tech.
And their net earnings were $5.0 billion, which works out to about $21 or 49 cents per share. And that included a $479 million pension charge, by the way.
Right.
But the number that really jumps off the page to me is that they generated $6.9 billion in free cash flow. Just a mountain of cash.
Those are massive numbers, but there is one metric in these filings that is arguably the most important for you to grasp if you want to understand the market's unshakable confidence.
The backlog.
The backlog. Lockheed Martin's backlog recently hit an all-time high of $194 billion.
$194 billion just sitting there waiting to be fulfilled.
Think of it like an incredibly long pre-order list. If you're an investor, a backlog that size gives you something incredibly rare in the stock market, guaranteed revenue visibility.
Meaning that even if they didn't sign a single new contract tomorrow, the company knows exactly where its money is coming from for years into the future.
They are completely insulated from short-term economic dips because that work is already locked in.
And the hardware driving those backlog numbers is massive. The F-35 program is obviously the cornerstone.
They delivered a record 191 F-35s in 2025 alone.
But looking through the contracts, it's not just fighter jets.
Yeah.
I saw a massive surge in momentum for the Patriot PAC-3 MSE missile system.
That is a direct response to the realities of modern conflict. We're seeing ongoing urgent demand from Ukraine and various allied nations who are scrambling to bolster their air and missile defenses.
Against the exact kind of ballistic threats we just talked about in the Middle East.
Precisely.
I saw the U.S. Army actually awarded Lockheed a $9.8 billion contract specifically to scale up their manufacturing for the Patriot. How much does a contract like that actually increase their output?
They're essentially tripling it. They are boosting the Patriot production capacity from about 620 units a year all the way up to nearly 2,000 units, 1,970 to be exact.
That is a massive industrial expansion.
It is.
So we have record sales, a $194 billion backlog, and massive factory expansions. It sounds like an absolute dream stock.
Huh.
But I was reading through some analyst notes, and they aren't all screaming buy.
If we connect this to the bigger picture, it explains the complex relationship Wall Street has with the stock right now.
Okay.
Let's look at the fundamentals. The company is operationally incredibly strong. It has 74% institutional ownership, meaning big banks and mutual funds hold most of the shares, and it offers a solid 2.1% dividend yield.
But despite all of that, a lot of financial analysts are calling the stock a textbook hold rather than a strong buy. Why is that?
It all comes down to its valuation. Its price to earnings ratio, or PE ratio, is sitting around 30.6. The average analyst target price for the stock is around $612.50.
So with the stock surging up towards $691 today, experts are warning that the stock is what they call fully priced.
Meaning the market has already factored in all the good news.
Got it.
If you buy a great house, but you pay double what it's actually worth, it's still a bad investment. Analysts love the company. They see the $194 billion backlog, but they think the current stock price already reflects how good the company is.
They believe it is priced for absolute perfection, which leaves very little room for the stock to grow further.
Exactly.
Well, here's where it gets really interesting. Because while Wall Street is debating PE ratios and legacy hardware like the F-35, these tech briefs reveal that Lockheed is quietly turning into a sci-fi company.
They aren't just bending metal anymore.
No. They are heavily investing in next-gen tech that completely redefines what a defense contractor actually makes.
The pivot toward artificial intelligence and autonomous systems is rapidly accelerating across their entire portfolio.
Take Project Overwatch, for example. This was one of the press releases. It's an AI-enhanced combat identification system that they recently flight tested right inside the F-35's sensor network.
It's not just a better radar.
Right. It's designed to give pilots independent, real-time threat recommendations. Basically, an AI co-pilot helping them sort through the chaos.
And they are taking the pilot out of the cockpit entirely with other projects. They are developing something called Vectis.
Which sounds like a villain from a superhero movie.
It does. But in reality, it is a collaborative combat aircraft. Essentially, a highly advanced autonomous drone designed to fly as a wingman.
Just a flying robot wingman.
Yeah. It integrates directly with fifth-generation manned fighters like the F-35 and the F-22. It takes commands from the human pilot, but executes maneuvers autonomously.
And they are backing all of these digital networks up with multi-domain readiness initiatives like Golden Dome for America.
And the diversification doesn't stop in the air.
I saw a recent $10 million order for high-energy laser systems. They are forming new partnerships focused on quantum computing.
But perhaps the most striking example of how fast they are moving is a project called the Lamprey.
The Lamprey.
It's a perfect example of how the industry is shifting. It's a multi-mission autonomous undersea vehicle, essentially an unmanned robotic submarine designed for covert operations and what the military calls sea denial.
Sea denial meaning what exactly?
Making a specific area of the ocean too dangerous for an adversary's ships or submarines to enter. You deploy a fleet of autonomous submarines to patrol a strait or a coastline, and it effectively walls off that water.
But what's remarkable about the Lamprey isn't just the technology itself, it's the speed at which it was created. They developed it to meet U.S. Navy needs in just 14 months.
That is incredibly fast. In traditional military procurement, it can take 14 months just to agree on the shape of a submarine's steering wheel.
Exactly. Taking an autonomous submarine from a basic concept to a deployed Navy asset in just over a year is Silicon Valley speed.
It shows that defense contractors are learning to operate like agile tech startups.
And if you thought autonomous submarines and laser weapons were out there, wait until you hear this detail. Lockheed is literally going to the moon.
Yes, the Artemis program.
They're advancing fission surface power concepts for NASA. Following directives from the White House, Lockheed Martin currently holds contracts to help put actual nuclear reactors on the lunar surface by 2030.
These reactors will support long-duration human missions.
It really highlights how the scope of a defense contractor has expanded. It's no longer just about building fighter planes. It's about engineering off-world nuclear infrastructure.
It's a massive shift.
So what does this all mean? We have record profits, sci-fi tech, and massive government contracts. But these tech briefs also introduce a sudden, incredibly modern complication to this whole picture.
The entire defense industry is currently in a dead sprint toward artificial intelligence.
Yeah.
But that race comes with a massive new vulnerability.
It is the double-edged sword of adopting commercial technology for highly classified military applications.
Exactly.
I was reading about a brewing dispute right now between the Pentagon and a major commercial AI company called Anthropic. And the Pentagon is actively asking huge defense primes, the major contractors who work directly with the government, like Lockheed Martin and Boeing, to officially report any reliance they might have on Anthropic's Claude AI model.
This raises an important question about the architecture of modern military systems. In this new era of AI warfare, relying on third-party, commercial AI models creates massive supply chain risks.
Why would a defense contractor use a commercial AI like Claude in the first place?
Because it's efficient. Imagine you are a defense contractor trying to manage a global supply chain. You might use an off-the-shelf AI model to write the logistical code that tracks where every single titanium bolt or microchip is located.
Or your engineers might use it to help write the back-end code for a non-classified database.
But the Pentagon is getting nervous about who actually controls that foundational code.
Right.
Precisely. It is no longer just about whether you have the raw materials to build a missile, it's about whether you control the algorithms that guide it or the software that tracks its components.
If a defense contractor integrates a commercial AI model into their manufacturing processes, and the Pentagon suddenly decides that specific commercial AI is a security risk and bans it, it introduces massive short-term uncertainty.
It's like building your state-of-the-art billion-dollar fortress on a digital foundation owned by a Silicon Valley startup.
If the startup changes their terms of service, or the Pentagon bans the software, the whole thing grinds to a halt.
Will these defense companies lose their rigorous contract certifications overnight because their software is suddenly out of compliance?
Will they face massive, unexpected costs to rip out the commercial AI code and replace it with something proprietary?
The supply chain is no longer just titanium and semiconductors. It is algorithms, data licenses, and software dependencies.
And that brings us full circle on the incredible ground we've covered in today's deep dive. We started with the weekend's geopolitical airstrikes and the very real, very human tragedy of friendly fire in a chaotic airspace in Kuwait.
We looked at how those events translated into a $194 billion backlog and a massive trading surge for Lockheed Martin's stock.
We explored their jump into the future with lunar nuclear reactors, autonomous wingman drones, and the rapid 14-month development of the Lamprey submarine.
And finally, we unpacked the hidden, incredibly modern risks of relying on commercial AI and highly classified defense tech.
For you listening, understanding this intersection is crucial because the very definition of defense is shifting under our feet as we speak.
For a century, defense was defined by heavy manufacturing. Who could build the thickest armor, the biggest battleship, or the fastest jet?
But today, it is equally about who builds the smartest data networks, the most resilient supply chains for microchips, and the most reliable autonomous systems.
The battlefield is becoming a vast, interconnected digital network, and the companies building that network are operating at the bleeding edge of both technology and global risk.
Which leaves us with one final provocative thought for you to mull over as you go about your day. We learned today about Project Overwatch, which is literally feeding AI threat recommendations directly to F-35 pilots.
Right.
And at the exact same time, we saw how chaotic and deadly a sky full of incoming ballistic missiles, slow-moving drones, and allied jets can get with the friendly fire incident in Kuwait.
It's a terrifying combination.
So as these massive defense contractors rush to put artificial intelligence in absolutely everything, from the cockpit of a stealth fighter to an autonomous Lamprey submarine patrolling the ocean floor, how long will it be before a human pilot simply cannot process the incoming data fast enough? And when an AI is eventually the one making the split-second decision to pull the trigger in a crowded, chaotic airspace, who is actually accountable for the outcome?